Yeah, I think it was all where the expectations had gotten. So Walmart has been doing very well, and not just this year, but over the last, I'd say, 5 or 6 quarters. A lot of traffic momentum. They have been growing EBIT dollars double digit the last few quarters. And frankly, they had a good comp of almost 5, but it didn't flow through to margins. And I think that's where the market today is taking some back from them.
Is it almost the flip side of the Target story, where Target had bad same-store sales, but their profit margins, or certainly their bottom line earnings, looked a little bit better? Walmart, it seems to be the opposite.
I think, well, that's absolutely true. I mean, Target's talked about being laser focused on margins this year and making sure that their profit model was still working. Walmart didn't have that problem. What they were doing was leaning into all the customers and traffic that they've been winning the last 3 years. And, frankly, this quarter, because they had a high level of remodels and sales got weak in sort of the back half of October. They did say it got better in early November, but that volatility is where they put some caution in. The other thing is that deflation is starting to come into the numbers in some parts of the store. And that also means that comps, while still growing, will probably be decelerating, we think, to around 3% in the fourth quarter.
How tender do you think consumers are right now?
Our view is that the consumer has had a strong balance sheet from all the checks that we were flying out during COVID.
Right.
The excess savings is probably down to $600 or $700 billion, and it's not a disaster, but people are making more and more choices. So we think holiday sales will grow 2.5% this year in the fourth quarter. Retail sales year to date are growing a little bit over 3%. And we just cut our forecast for next year for retail sales to only grow 2%. So,
wow.
This is part of a deceleration to norm, is what I would say, in retail.
Do you have a sleeper pick in retail?
Well, the sleeper today might just be Walmart. If you look at our top 5 names, it's Walmart and Costco. Kroger is kind of a sleeper in that I think people are very concerned about how deflation could also hurt them. But if they're able to get the Albertsons deal done, we think there's some margin upside into the back half of next year and then 25. And I would say Sherwin-Williams is one we use for the interest rate sensitive, where we think there's some nice margin expansion. If volume ever comes back, that could be a nice one there. And O'Reilly. So O'Reilly Automotive, another, I don't know if it's a sleeper, but we still think it's a core winner in that space.
Are we in retail deflation?
We're in a massive period of retail disinflation, and we are certainly seeing in categories outright deflation. So a lot of general merchandise, electronics, et cetera. And what we're learning now is which categories are going to pivot from just disinflation to deflation. And that's why watching this holiday and these trends, I think, are so important. And that's why I think what Walmart had to say today is not just hurting their stock, it's sort of taking down retail in general.
So final thought, you say 2% gains over the holiday season in sales. Who's the main beneficiary there? Is it Walmart?
We'd say any retailer that has got inventory right,
has
been growing traffic, is in a better place to win.
Got to leave it there, Greg. Thanks very much.